BlackRock started the institutional Bitcoin frenzy in 2024, and they're getting even more bullish. But the real question is why now? When BlackRock originally published a report announcing a 4% Bitcoin allocation was optimal, almost no one listened. However, since then, we've seen nearly every Wall Street giant compete to get their hands on your Bitcoin. And judging by what BlackRock's head of digital assets just said on Fox News, that competition is about to explode. Let's play the clip.
At BlackRock, Jay Jacobs. Okay, first, establish your long-term view of crypto.
Well, Bitcoin in particular is this non-sovereign global decentralized asset that can really provide value to people's portfolios in small doses as a unique asset. Sort of like how gold doesn't behave like stocks or bonds, Bitcoin is driven by its own rules and its own drivers, predominantly, which is greater geopolitical or inflation risk. And frankly, we live in a world where these are prevalent risks around the economy, where people want to hedge that with different assets.
Isn't it interesting? It used to be fringe, and now, thanks very much in part to Larry Fink, your boss, and iShares coming out with the iBit, this is more than 2 years ago now, that it really became this opportunity for people to understand it. Are you saying now that Bitcoin and crypto are long-term investments?
I think you have to look at it through a long-term lens because it's volatile. Because we see over weeks, months, it can be up and down. People are still trying to figure out what the value of this asset is. But if you zoom out and take a long-term view of the role it can play in a portfolio, it can really be one of those diversifiers that behaves unique from stocks and bonds.
When somebody who is Bitcoin curious comes out and says to you, Jay, what is the value? 1 minute in October, it's 126,000. Today, it's 76,000.
You have to look at it in the context of a broader portfolio. We can't put a specific price target on it on a given moment. It really has to do with how much do people need this asset that can behave uniquely, that can be a geopolitical hedge. That's constantly changing around the world. When you see, more currency debasement, when you see rising government debts, when you see that more people want to move assets across borders, that's going to increase the value of something like Bitcoin. And so in this world, we see that as a structural trend that's growing. But minute by minute, that demand and supply is going to change.
Interesting to watch, right? First of all, obviously, I'm not the biggest fan of BlackRock. You guys know this. I'm sure everyone in the chat's not the biggest fan of BlackRock. But again, what Uncle Larry wants, usually Uncle Larry gets. If you are more of a tinfoil hat person, you might be saying that Larry Fink actually runs the world. Well, it seems like that is the case. Again, in 2024, when they launched the Bitcoin ETF, it fundamentally changed the trajectory of Bitcoin and arguably, at least in the last 2 years, not really for the better yet, but we are starting to see that things have fundamentally changed on the just grand idea, the overall general idea of what Bitcoin is. Should it be a part of your portfolio? Should it not be? And as you heard in that clip, he's basically saying, yeah, actually, Bitcoin can actually help you. It should be a part of your portfolio. Again, they have been saying this since they launched the ETF, but now we're starting to see that it's coming from basically every corner of Wall Street at this point saying, look, not only should you buy Bitcoin, but obviously you should buy our Bitcoin product. And that's probably the real shill here. They are talking their books. But when you listen to that clip, it is very interesting. The main clip that really stuck out to me is what he said. Bitcoin is driven by its own rules. Now, obviously, in the past few years, we have seen a lot of correlation between Bitcoin and stocks and equities, or the kind of inverse relationship between gold and Bitcoin. As a lot of us have been talking about recently, since the suit coiners have came in, since the suits have came into Bitcoin, Bitcoin is trading a lot more like a macro asset because they are following the macro news, the macro landscape. And yes, they have a little bit of Bitcoin. So if they get spooked, they're probably going to sell Bitcoin first. If they're starting to get bullish because of the macro landscape, then they'll probably get a little more comfortable buying into Bitcoin. And I do want to rewind the track a little bit. I have the BlackRock reports that they launched a little while ago. I believe these were last year, end of 2024 when they launched. Here's the first one. I'm just going to read the conclusion, but Bitcoin, a unique diversifier. Why Bitcoin's appeal to investors lies in its detachment from traditional risk and return drivers. Again, this is an old report. They literally just said this yesterday. But the conclusion is probably the only thing that really matters in this whole thing. Everything else in this report you've probably already heard. And you definitely heard this conclusion, but I'm going to build the case of why they're doing everything that they're doing right now. So conclusion, while Bitcoin has shown instances of short-term co-movement with equities and other risk assets, over the longer term, its fundamental drivers are starkly different and in many cases inverted versus most traditional investment assets. Oh, I'm not pulling it up. Sorry, guys. Which is literally what we've been showing you on the show, what we've been covering, what I just said a minute ago. This isn't just me saying this. So if you don't like my funny accent, you don't like that I yell at you, you don't like me as a person, and maybe you don't like BlackRock, maybe you like me more than BlackRock, I don't know. But they've been saying the same thing. And it has been getting lost in all of the news and, you know, the fact that BlackRock's the world's boogeyman and whatever they touch, they're going to destroy. Well, they've been saying, and this, again, is over a year old. They've been saying exactly what's been going on if you're looking at the data. So whether you like them or not, this conclusion is true. This conclusion is exactly how things are playing out. Anyways, going further, as the global investment community grapples with rising geopolitical tensions, concerns over the state of U.S. debt and deficits, and increased political instability around the world, Bitcoin may be seen as an increasingly unique diversifier against some of these fiscal, monetary, and geopolitical risk factors investors may face elsewhere in their portfolios. Have we not seen this literally play out to a T? Now, again, maybe your spidey senses are popping up here and you're like, it's almost like maybe they are causing all of this instability. And maybe they want a monetary reset. Maybe they want the escape valve of Bitcoin. I mean, I'm not going that far. I'm just saying there is a haunting similarity to what we've seen play out in the last year in regards to Bitcoin and in the macro landscape. It was literally that exact sentence that BlackRock said over a year ago as why people would want Bitcoin. And now we have the actual, in real life, examples of these things playing out. So you could say maybe they're manufacturing this, or maybe they are some of the smartest people in the room, like that one documentary about Enron in the past. So, you know, no correlation there, but it's the same, the smartest people in the room, right? Well, it played out exactly as they said in this old report by BlackRock. But moving further, I have the other report that they dropped, and I believe this one was mid-2025. And this one is titled, this one was December 2024, and the other one was mid-2025. Sizing Bitcoin in portfolios. Of course, this is where this connects to the clip that we just watched, and I will just hit you with a little bit here on tailoring Bitcoin's fit. So how can investors think about a Bitcoin allocation? We take a risk budgeting approach, sizing the allocation based on how much it would contribute to total portfolio risk, measured by its long-run volatility and correlation to other assets. As you heard in that clip, that is kind of the framing that they're taking right now. They're not going as bullish as maybe Michael Saylor or we would on this show, where we think the traditional financial system is the risk. Obviously, they are conservative asset managers. They can't go that far, but they're like, hey, take a little bit of risk. Your portfolio is risk anyways, basically. I know we all try to protect our portfolios, but depending on your risk assessment, these are probably the size of allocation you should add to Bitcoin. And here's where they get their math. In a traditional portfolio with a mix of 60% stocks and 40% bonds, those 7 stocks, if held, talking about the Mag 7, if held at their current weights in the MSCI world, each account for 4% of the overall portfolio risk on average. That's about the same share of a 1 to 2% exposure to Bitcoin. And given Bitcoin's correlation to other assets, it's relatively low. It's more volatile, making its effect on total risk contribution similar overall. Now, they do have a nice little chart here. Estimated contributions to risk in a 60-40 portfolio. The average Mag 7 stock allocation is about 4%. And you can see share of portfolio risk. 1% is about a 2% risk. 2% is about a 5% risk. And if you go to 4%, that's about a 14% risk. Now, we have heard some interesting kind of updates on this, not from BlackRock, but of course from the Goldman Sachs and Morgan Stanley of the world. They're getting a lot more bullish than this. The highest number we saw this like 2 weeks ago was maybe if you are more bullish on Bitcoin, you go about 22% of your portfolio. So this is where I'm starting to think that I think BlackRock is starting to feel the heat of competition. I think this is where they are starting to realize that they're no longer the only shark in the water here. They're no longer the only institution that is leading the charge. Yes, they started the race, but in the last week, what we've seen from Morgan Stanley and, of course, Goldman Sachs announcing they're going into Bitcoin, you're starting to see that the Wall Street race to literally get your Bitcoin from you, or rather get money from you so that they can acquire more Bitcoin, is starting to heat up. And that's where I'm starting to think that the fact that Morgan Stanley launched their ETF, even though they're not really, they're still far behind BlackRock. And I'll go over to Bitcoin Treasuries real quick. Of course, BlackRock's ETF, the IBIT Bitcoin Trust, has 800,000 plus coins. And even though that Morgan Stanley, one of the bigger banks in the world, the first U.S. bank, lower fees, obviously in the last week, they're not going to catch up to that. Currently, they did jump up. If I remember correctly, last week on the start day, on the very first day, there were 43. Now they are at 36. With a measly, at least up till now, we'll get updated numbers next week, but there are some significant inflows into the ETFs this week. They only have 1,800 coins, right? Let me I got to zoom in here. 1,821 coins. So in comparison to BlackRock, a measly 138 million compared to at least the current numbers. We'll get more numbers next week, $60 billion. So look, there's still a long way for Morgan Stanley to go. But I think what we're starting to see is that there is this competition going on right now, and Morgan Stanley is a huge bank. They have the infrastructure basically already in place to get this to millions of customers. So the inflows that we're seeing into Morgan Stanley currently, they might be making a good run. Now, obviously, BlackRock's almost at a million coins. That's a lot. I don't know if Morgan Stanley is going to be able to catch up to them. That's a big question, unless they're I think it was tens of thousands of advisors at Morgan Stanley are all going to basically recommend to their clients, yeah, you should probably go 20% of your portfolio into Bitcoin. This game can change if BlackRock is basically saying just do 1 or 2%. It's a significant amount of capital. Just the numbers alone from Morgan Stanley, they hold roughly 7 trillion, depending on the numbers. Somewhere they say 7 trillion-ish, maybe as low as 5. It's in the trillions. If they're recommending 20%, that's a significant difference than the $14 trillion asset manager BlackRock only recommending 1 to 2%. You're starting to see the numbers could get a little interesting, but they're not the only ones in the game, right? And this is where you're starting to see that I think what we're seeing from BlackRock right now, I think they are feeling a little bit of the pressure from Morgan Stanley. And here's the overall numbers. These are the upper range of asset managers and banks and how much money they actually hold. So you can get an idea of the scale of how much money is out there, that these people are now all going to go out and recommend Bitcoin. They hold about, depending on the numbers, the top 500 asset managers like BlackRock, Vanguard, Fidelity, etc., is about 140 trillion. The top 1,000 banks on their balance sheet, all loans, deposits, securities held, 164 trillion. So obviously all that money in itself isn't going to flow into Bitcoin. All global banking assets, including smaller bank, every deposit taking institution, $180 trillion. Total global investable wealth, everything manageable and deployable, $345 trillion. The total global financial intermediation, every asset in the entire system, $410 trillion. Now, obviously, that tsunami of assets out there isn't all going to flow into Bitcoin. but we're starting to see the race of these asset managers and banks starting to recommend from 1 to 20% of those assets into Bitcoin. If we are starting to see, as we have been kind of covering on the show the last couple of weeks, this race by Wall Street to outcompete themselves and recommend Bitcoin with their army of financial advisors to their clients, I think we all underestimate how quickly the capital can flow into Bitcoin. Hence why I'm starting to get this sense that I think Larry Fink is seeing the same thing. Even though Morgan Stanley is 2 years late to the ETF race, even though they have about half of the total assets under management that BlackRock has, if they're recommending a higher percentage of their portfolio to their clients, this race could get very interesting. And that's if the Bitcoin price stays stagnant here. If they are buying this much Bitcoin, then at a certain point, the price of Bitcoin is going to go up. Now, everyone knows the Bitcoin on exchange number. It's been roughly around 2.5, depending on the numbers, maybe 2.1 on the lower end, 2.5 on the higher end for the last, about 2 years minimum. It was as high as 3. We're starting to see that slowly drain. Now, if you do just the simple mental math here, if we're seeing these huge asset managers and banks recommend up to 20% of their portfolio, of their clients' portfolios into Bitcoin, that 2 million Bitcoin could very quickly actually leave the exchanges. Now, obviously, they usually buy over the counter, which historically doesn't really affect the Bitcoin price. But if the OTC desks completely run out, where do you think they're going to go to get their Bitcoin? Are we going to be seeing the biggest asset managers and banks in the world literally buying Bitcoin on the open market because they have that much interest, that much capital, and not enough Bitcoin? And what do you think the price of Bitcoin is going to do? It's got to go up. Everyone knows that the only way to get Bitcoin out of your hand is for you to sell it at a price that you like. It has to go up. I'm sure everyone here, most of the Bitcoiners that have ridden out this bear market are looking at the current prices like, there's no way. I have one friend. I don't think he watches the show that much anymore. He kind of crashed out on me. I still consider him a friend, though. He would always say, my SAT is already priced at an infinite amount of dollars. Now, obviously, he's being an extremist. He's kind of a troll. But that's how a lot of Bitcoiners think. A lot of people in the chat, even though $1 million per Bitcoin is crazy right now, a lot of people already price that however much Bitcoin they have at $1 million price points. And that's when they'll start considering getting rid of their Bitcoin. It's really about the scale of interest. And this is, again, this isn't even accounting for Stretch and Saylor. This is like his competition. Or if you go to the Simon Dixon route, you could say that Saylor is a part of Wall Street. So maybe they are in cahoots here a little bit, but this is Wall Street, legacy Wall Street, looking at Bitcoin, seeing they have to compete, seeing that, hey, they're not the only ones in the game anymore. Hence why I think Saylor's really FOMOing into buying a lot more Bitcoin, because he's sensing this exact same thing. Obviously, he had competition when Larry Fink came into the game. Now we have basically every asset manager, and we have our first U.S. bank getting into Bitcoin, creating Bitcoin products, creating Bitcoin ETF, deploying Bitcoin trading on their, traditional trading platforms. The foundation is totally being built right now for an incredible run if this FOMO really does catch on. As we were talking about yesterday, this idea of what true scarcity actually means catches on. This game could completely blow all of our minds in this next run. And I'm not just saying that as hopium on today's show. It's just the simple supply-demand economics. When an infinite amount of cash meets a truly scarce asset, the only thing it can really do is go up. Now, I do want to update you a little bit on the Morgan Stanley ETF, because I think this is, maybe I'm connecting the dots that aren't there. Possibly I could be doing that. But this is, I think, where it starts getting interesting. Of course, the Morgan Stanley Bitcoin ETF, it has hit 9 straight days of inflows. $8.1 million today as of 11 a.m. Eastern time, and about 16.6 million average daily. Only 12 days post-launch and already ranked 3rd Bitcoin ETF by inflows. You're starting to see what's going on here. Hence why I showed you guys the ETF ranks. And I know you guys don't like the ETFs. I'm not the biggest fan of the ETFs. But from all the data I've seen, from all the on-chain metrics I've seen, and and other Bitcoin influencers, Bitcoiners that are my friends, most of the Bitcoin that is allocated to these ETFs, they actually hold that Bitcoin. Now, again, BlackRock is the clear leader here. About, what? I don't know, 5 times the second leading ETF, which is Fidelity. BlackRock has, again, over 800,000 coins. Fidelity has about 100 and, hold on, I'm blind, 88,000 coins. So there is a race going on here. And like I said, Morgan Stanley is down here all the way at 36 on this list with a measly 1,800 coins. But if they're already the 3rd leading ETF by inflows, things can change very quickly. Now, I know from a Bitcoiner's perspective, we're not the biggest fans of banks. You probably don't like Morgan Stanley. You might be like some of my friends that don't even have a traditional bank. You're just like, I don't care. I tuned out. I'm out of the system. You might not even have a bank. You might just be in purely cold storage, on an Amish farm, paying for your bread, your butter, your steaks in Bitcoin. Your plumber gets paid in Bitcoin. I don't know how you do it, but I'm sure there's some of you out there that are completely 100% living on Bitcoin. And the banks don't matter to you. But for the average normal person, the banks still have a very strong influence on what they do with their money. It literally destroys my brain when I try to think about how people could have lived through the 2008 financial crisis and just like having amnesia, completely forgot about it. They trust the same people, the same institutions. They've built that trust back, and they're just back putting all of their worth, all of their value, all of their money in a bank. It's just sitting there, just waiting for either a new financial crisis to wipe them out again, or for them to be debanked because they say something crazy on the internet, or what have you. Whatever the risk is, as we know in Bitcoin, trusted third parties are a security hole. It's crazy to me that people haven't learned these lessons yet, but humans are very interesting beings, and we have very short memories, and we're just doomed to repeat the same problems and failures over and over and over again. So for us, hey, we don't like the banks, but a lot of people still do. And now their bank is literally either already rolling out a Bitcoin product, it's already live, or about to roll out by some point this year, or you could only guess that they're in the back end working on doing this. As we saw with Vanguard, anyone that's bought Bitcoin at this point is starting to bend the knee at Bitcoin and realize we need some Bitcoin product. Not only do we need those to compete, but our clients want them. Because if you're going to an asset manager and you've been with him for 17 years, or at the very least 15, 16 years, whatever, 10 years. We'll go 10 years. Nice round number. And you're looking at the gains that Bitcoin has provided in the last 10 years. You got to ask your manager, hey, man, why didn't you recommend Bitcoin a decade ago? I wouldn't have to work my job. You see, they're starting to get the pressure points here. And this is where I think this I'm blanking on his. Is it Jay? Hold on. I remembered his name. I said it in the beginning, but I'm blanking on Jay Jacobs. I was going to say Jay Adams, but that's Lords of Dogtown. I'm doxing myself here. Jay Jacobs here is on Fox News. We're seeing a lot of interest from literally every bank now So they're competing for the attention so that their product can get in the limelight so that they can maintain their lead. Obviously, BlackRock is still ahead of the game for the foreseeable future. But if Morgan Stanley's infrastructure can overtake BlackRock as the leading inflow by a marginal amount, again, they seem to be recommending a lot more than just 1% to 2%. But I think we're going to see BlackRock continue to go out and be like, actually, you know, we were being very conservative. And I remember one of the oldest reports that we saw from BlackRock. It wasn't Larry Fink. It wasn't Jay Jacobs. It was like a research report paper. And they did come out and correct it. But one of the earliest reports was like, you need to invest 80% of your portfolio. And then I think they got pushed back and everyone was like, yeah, there's no way I'm putting 80% of my portfolio in Bitcoin. So they realized they had to be a little more conservative. 1% to 4% has been the average kind of conservative bet into Bitcoin. At least that's what we heard all of 2025. And now, start of 2026, we're starting to see that those numbers are increasing a little bit. People are worried about what stocks and equities are doing. Stocks and bonds are doing. They have been essentially moving in lockstep. Stocks drop, bonds are dropping, or bond yields are dropping, et cetera, et cetera. There is a very close correlation between traditional financial assets currently in the market. And I think we all know why. Obviously, Trump posts are really affecting the market. Everyone's worried about what's going on in the Middle East. We're all wondering if there's going to be a prolonged war in the Middle East. As of, we're all wondering, are the tariffs on? Are they off? Is the strait open? Is it closed? What is actually going on? In the morning, you hear it's open. Then in the evening, once the markets close, straits close. And then there's deals, there's no deals. So you starting to see the picture. Everything is kind of moving in lockstep. But what have we seen since the start of the war? Bitcoin is slowly grinding up. It seems to have decoupled. Now, it's not a very obvious decoupling yet, but it seems to be moving in its own terms right now. And what did Jay Jacobs just say? Bitcoin has its own rules. You see, I'm not saying BlackRock I'm also not saying that people at BlackRock aren't Bitcoiners, but I'm not saying that Larry Fink is a hardcore Bitcoiner here, but Jay Jacobs might be. He might be a true believer. There's probably people at BlackRock that are true believers. They're seeing what we're seeing and they're like, oh man, maybe these crazy Bitcoiners have a point. Maybe we didn't give them enough credit when we made fun of them for 15 years, when we fought them, when our boss was telling everyone, stay away from this thing because it's an index of money launderers, it's only for criminals. And now we are going to have to backtrack and pretend like none of that ever happened and go out there and shill for Bitcoin. Because if we don't do it, Morgan Stanley will do it. And if Morgan Stanley isn't the leader, then it might be Goldman Sachs. And again, like I said, that doesn't account for the fact that Michael Saylor is now the leader in this market. And they're like, damn, I thought we had the clout. I thought we had the juice to come in and overtake Saylor. And Saylor just continues to smash by. When the world competes for you as a Bitcoiner, your life does improve. Now, we have yet to see number go up in the way that we all expected. But we are starting to see a slow grind up. We are starting to see some healthy price action here. Now, I know a lot of people are like, how can you say that Bitcoin is resilient? It's still in the 70Ks. It's bullish right now. Yeah, it's you could say it's been sideways, but it's a bullish grind up right now. I'm not of the opinion that we are going to see an Omega candle anytime soon. And by that, I mean within the next month or two. I think what we're going to see is Bitcoin try to break out. If we do get a breakout above 77 into the 80Ks, obviously extremely bullish. If we fail the next breakout, then that's just more time to accumulate. And you could argue, you could say that the institutions are also trying to... What am I talking about? I can't laugh. Okay. The institutions are trying to acquire a lot of Bitcoin. Okay. Hey, I guess, let me see. I'm getting trolled right now. Maybe I'm seeing things, bros. Maybe I'm seeing things. What is this? Alexander 1990. I'm sorry, dude. That's my laugh. I can't fix the laugh. You know, it's an acquired taste. You're gonna have to love it. Okay, moving forward. I guess I rambled a little too much about BlackRock and what I see with the institutions and the ETFs. And I know you guys don't like it. I know we're not the biggest fan of, quote, paper Bitcoin. I know we're not the biggest fans of institutions holding a huge amount of Bitcoin. But there is an interesting trend going on. And I saw a Checkmatey clip, and it was with this idea that he said something on the lines of, and I think it was with Natalie Brunell that he said this. He's like, look, from all the data I can parse through, there's probably only about 100,000 people that hold Bitcoin in self-custody, and that might feel low. It also might be correct because of so many people using different addresses, because we can't link a single address to a new hodler. It could be where we are. Obviously, we'll never know because not every address is linked to an ID, which is part of the benefit of Bitcoin. But what he did say that was interesting is that ever since the retail ETFs have come in, it seems like it's incentivized a lot of people to get into Bitcoin because maybe they're just scared of self-custody. And maybe we'll talk about this in the culture. Yeah, maybe that's what I'll do on the culture today. Let's talk about a little self-custody. I'll hit a poll and ask you guys, not if you do self-custody, because I realize that might be a question that doxes you, but do you think that self-custody is too hard for most people? Because it seems like there is a mass amount of interest into these ETFs because they don't have to self-custody it. And that does bring on its own problems, but it also brings on a lot of attention into Bitcoin, a lot of capital into Bitcoin. So we are in a very interesting time. And as I said yesterday, this idea of, I think the real question is, can Bitcoin survive Wall Street? I think that's what we're all going to be living through for the next year or so, maybe 5. Who knows? But I think that's the real question that we're currently finding ourselves in. All right. Anyways, going further a little bit. Okay. I thought my Twitter was down. Again, on this theme of institutional adoption, I don't know if you guys saw, but Charles Schwab is now dropping Bitcoin education. It is a little stale, but we got to watch it here because this is part of the theme. The suits are coming. It's like, we're like Paul Revere here. The suits are coming. The suits are coming. Actually, no, the suits are here. They are on our doorstep. And then we got a interesting update this morning. The new Fed chair, Kevin Warsh, is being confirmed today in Congress. And Senator Lummis asked him directly what he thought about Bitcoin and crypto and digital assets. So the new Fed chair has got a good soundbite on Bitcoin and what he thinks. That's going to be the breakdown on today's show. I will be right back after this commercial break.
Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded, non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
I want to give a shout out to our partner, Stampseed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? Stampseed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates instead of just writing them down on paper. Paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on StampSeed and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
Okay, guys, we are back. Hold on. Okay. The current Bitcoin price is 75,340. Man, it's feeling pretty good. Feeling pretty good with this price tag. I don't want to chart boy on you guys. You know, can't do that every day. Well, we save that for special time. Maybe Friday we'll do a little chart boying, but it is holding up in this 74 to 76 range. So it almost seems like the 60K bottom, if I can call it a bottom, to 70, 73-ish range has been clamped down a little bit, and we're kind of ranging around 75K right now. Who knows if this will hold up? If it does, very bullish in my opinion. But anyways, we are currently down from all-time high about 40%. So 40% discount on all-time high. If you like Bitcoin at 126K, you're going to love it at 75K. It's a discount. Who doesn't like discount? It's on sale. It's on a fire sale right now. Market cap, we have secured the $1.5 trillion market cap again, boys and girls. We're gonna reclaim 2 soon. All right, clock it. Anyways, the block height is 946,081. I repeat, 946,081. So I saw this morning, and honestly, let me just play it. I don't want to roast it too hard. I want to put bad thoughts in your eyes, but in your mind. Sorry. Charles Schwab releases an educational video on Bitcoin and risk management. Now, let's compare this to what BlackRock is basically saying, or what they said over a year ago. Here we go. Oh man, gotta love it. Oh man. All right, guys. I forgot I can't laugh. Hold on. I forgot I can't have fun here. The fun police are here. I think we might have a job for a little bit here. That's all I'm going to say. Anyways, obviously they're saying basically the same thing as BlackRock said over a year ago. But you're seeing production starting to get a little better. As you can tell, they are talking to a very conservative audience, people that still think Bitcoin is risky. Though I found it interesting from my perspective. Like, maybe it was just because I was young and naive and I had no money. There's a different perspective here. Obviously, I forget who it is. Is it Warren Buffett quote that he says, if you want to build wealth, you put all your eggs in one basket. If you're trying to protect your wealth, then you diversify. As you can tell just from the simple framing of this video, they are talking to people that are trying to protect their wealth. Hence why they're saying, your risk appetite, your risk aversion, how much are you willing to risk? They even say the classic Bitcoin meme, which we probably stole from TradFi, but don't invest more money than you're willing to lose. You can just see the different framing here. Because what do we do here on the show? It's like, look, we're all broke. We ain't got no money. Like, you want to win, you want to risk it for the biscuit. We really don't think in terms of necessarily risk loss. Like, we don't really think of how much we can lose because most of us start out with zero. What do we always do here? We're like, yo, just think about how much you can gain. And that's probably why we get called snake oil salesmen and scammers. I saw someone say the classic Opti troll where we're clickbait scamming you into profits or whatever. That Nico gets mad at me. Oh, wait, sorry, I forgot. I can't say that. But you can see the different framing here. So now we're seeing $12 trillion Charles Schwab out here doing Bitcoin educational videos, and they're talking to their clients. At the very least, they know who they're talking to. They know the psyche of their clients. And what they consider the biggest threat about Bitcoin is the volatility. It is the risk. It is the maybe this is going to crash and I'm going to panic and have to sell at the bottom with money that I need in a year or two, or my retirement money. That's a totally different conversation than us younger people that are like, look, I am never going to escape the matrix. I'm never going to escape generational poverty unless I do something sort of extreme, at least quote extreme to the average person. And I always when I have this conversation with my friends, and maybe it's just because I'm younger and I'm perpetually online, and I just have a fundamentally different worldview than someone that built their wealth while I was still in diapers, that built their wealth before I even became an adult. We always have this view, at least this is a very common view on Twitter amongst my friends, amongst people that I follow on Twitter, is if you don't go against the grain, if you follow what has worked in the past, it doesn't work in today's world. And in some respects, what you're seeing in that clip is them basically admitting that. The 60-40 portfolio is the go-to default portfolio, or rather, it was the go-to default portfolio for the longest time. I don't know. I think I heard an admission of guilt there, an admission that, hey, this no longer works anymore. But they're framing in this idea, hey, maybe you want to, diversify even more into this new thing. But I really wanted to hear the, what can you gain if you just go all in on Bitcoin? That's the real question. That's the real savage move here. But again, I'm a Bitcoin YouTuber. I'm biased in Bitcoin. At least on one respect, hopefully, at the very least, I'm a little more entertaining than that guy. I hope. I don't know, maybe. Maybe you don't like my laugh, but I think I'm a little more entertaining than that chud. No, I'm not making fun of him. I should have said that. But hey, you can see there's a trend going here. It's no longer just BlackRock in the game. We have other huge asset managers. Basically, BlackRock competition now entering the game. Yeah, they're a little late, and maybe BlackRock feels very comfortable in their lead here. But I think this game can change, especially if the price of Bitcoin somehow doesn't maintain going up. Like we covered yesterday, if this basis trade is still able to, quote, suppress the Bitcoin price, or if the whales are able to, quote, suppress the price because they can sell a lot of Bitcoin, get more fiat, buy it at a low, just rinse and repeat until there's enough people to actually break that mechanism, maybe they will be able to acquire a lot of Bitcoin. If the price starts ripping, then I think BlackRock's going to be very comfortably in the lead here. But you can see they're all starting to think in the same way. You need to get some Bitcoin in your portfolio. Though they are being a little nice about it. It's like maybe you're thinking about adding Bitcoin into your portfolio, and you should research. You should get your 40 hours a week of podcasts. You should understand the risk tolerance that you can basically deal with, because it is very volatile. But the 60-40 portfolio doesn't work. We actually covered that idea over a year ago, that we saw the institutions admit the 60-40 portfolio no longer works, and just adding a little bit of Bitcoin into that portfolio will change the game of your portfolio. It's actually James Lavish that did a good report on it. And I think his numbers were basically, by just adding 1% of your portfolio, your 60-40 portfolio into Bitcoin, you're going to get outsized returns that are going to blow everything, the rest of your 99% of your portfolio out of the water. Now, a little bit of good thing, it's cool. But a lot of a good thing, if you ain't ready for it, could be bad, but it could also be very good. We're risking it for the biscuit here, guys. We're never going to escape generational poverty unless we don't do anything on the extreme side, at least from what our, I don't know, generation above us probably believes. But you can see there's a theme. It's a theme building in 2026, which is what I've said. I think 2026 I think we're going to see the floodgates here. And I know I'm not At least in hindsight, not the happiest that the institutions are here. But at the very least, they're here. Bitcoin is for enemies. Can you guys just buy a bunch of Bitcoin, pump our bags? We feel a little better about ourselves here. Don't just take all the Bitcoin and then short it. And we're still broke. And we can only buy little pennies. But it doesn't matter. Just keep buying Bitcoin. You're seeing the game. They want to acquire Bitcoin, so just acquire Bitcoin. And actually, he did make the same point that I was just relaying about what Checkmatey was saying. He said, maybe you don't want to buy spot Bitcoin. Maybe you just want to buy the ETF. There's cons and there's benefits of this. And I did see some of you guys over the ad break basically talking about self-custody. So I might have to get you guys to repost those because I'll probably lose them in my streaming software. But, you know, sometimes we got to face the hard truth. And even though we are self-custody maxis, it's second nature to us. It's not to a lot of people. They are very comfortable with other people holding their money. And maybe they just don't want to learn a new skill. Maybe they don't trust themselves. Anyways, hold on. Jeez, I'm gonna have to break. I'm about to sneeze on you guys again. We got the new Fed Chair confirmation hearing this morning in Congress, and we got a great soundbite coming out of it. Interesting difference from current Jerome Powell. Let's watch that after the break.
I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you already know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY.
Man, I don't know what's going on, but dying over here. It's been a rough morning for me, guys. I'm hurting. I'm optimistic today, but I'm hurting. I had a rough morning. Anyways, and someone in the chat said he didn't get confirmed yet. Yeah, I know. I said his confirmation hearing started today. Maybe I need to slow down a little bit. But again, this morning, this was at 10 a.m. It was tweeted. We saw the Senate confirmation hearing for the Fed chair, Fed chair nominee, Kevin Warsh, who Trump picked to replace Jerome Powell. And you guys know the whole key fob of Trump versus Powell. Trump doesn't like Powell. He's been calling him too late Powell, that he's too late on cutting interest rates. Basically putting the blame on Powell for a lot of the economic woes that Trump has been facing. And so he picked Kevin Warsh. Now, we talked about when this nominee was selected by Trump, how he seems to be a pro-Bitcoin Fed chair. So now not only has Bitcoiners taking over the federal administration under Trump, or quote Bitcoiners, but it seems like now, and we have them at the SEC, the CFTC, they're infiltrating Wall Street. We now seem to have another pro quote, I'm going to put air quotes on this one, pro Bitcoin Fed chair, which is very interesting. As I said in the past, hey, we haven't ended the Fed yet, and who knows how long that's going to take. But it seems like we have someone that is, at the very least, understanding Bitcoin. So Senator Lummis asked him a very direct question, and he has a very interesting response. Let's play that.
I believe that digital assets should be incorporated into our financial industry so Americans have new investment opportunities and consumer protections.
Senator, digital assets are already part of the fabric of our financial services industry in the United States. Yes.
Okay, short but sweet. It seems like, hey, he's at least a realist here. Here's Senator Lummis tweeting about it. Digital assets are being woven into the fabric of America's financial system. I look forward to a Federal Reserve chair who not only understands that, but embraces that. Now, before I go further, I would be remiss to acknowledge the fact that we have heard something like this before, particularly with Gary Gensler when he went into the SEC. He taught a course at MIT, and then once he got in that position, it seemed like his tune changed a little bit. Though this time around, I think it might be a tad bit different, considering that Trump is so pro Bitcoin, pro digital assets. But he has in the past had very interesting clips about his understanding. And, you know, it may not be like a hardcore Bitcoin maxi cypherpunk understanding, but he seems to understand what's going on. He seems to understand that, yeah, Bitcoin's not going away. Seems to understand that where we currently are, you can't ignore reality. Bitcoin is already a part of the traditional financial system. It already is the fabric of our framework for how finances work, for how money flows around the world. And the fact that he's acknowledging that, I think, is pretty big just in and of its own. Now, obviously, a lot of people have been a little unsure of whether whether the new Fed Chair Warsh nominee is actually going to get confirmed or not. There might be some pushback. Who knows when we'll be able to fully know that he's confirmed. That's the first point. The second point is a lot of people are unsure whether he's going to be hawkish or dovish, whether he's going to cut rates or not cut rates. And remember, he is a Stanley Druckenmiller acolyte. You know, he was one of his mentees here. And what Stanley said in regards to Warsh is that he will read the room and he won't necessarily just cut rates or raise rates just because he wants to, just because he has a certain ideology or he just doesn't like Trump or what have you. It seems like Trump and him are actually good friends. As of now, where we stand, it does seem like we might not get too many rate cuts on the table this year. I think the last numbers I saw is maybe 2, and they're not going to be until the end of the year. Again, you know, Jerome Powell is not going to be in there for that much longer. I doubt we're going to get one from Jerome Powell. Of course, there is a bit of a contention, at least in Bitcoin, whether interest rate cuts even affect us. They haven't really been as bullish as we all thought it was. Obviously, we know what the Trump administration, or as has been called the Mar-a-Lago Accords, wants to happen, which is print more money and lower rates. Expand the money supply and lower rates. They want the liquidity back on the table, and that's how they're going to make it happen. Here is Lawrence Lepard's take on this. Actually, let me go to this one. We have this quote, another quote coming out of this hearing, and it goes, Warsh opens the hearing by noting that today's inflation is a residual of the Fed's past mistakes. The Fed missed its mark, and we are still dealing with the legacy of the policy errors in 2021 and 2022. Or, you know, after the 2020 printathon. Quote, once you let inflation take hold in the economy, it's more expensive and harder to bring it down. Captain Obvious here. No, once you expand the money supply, you basically don't bring down price. I mean, you can. In theory, you can. So I get, and it is harder to bring it down. In theory, you can, I guess, technically bring down inflation, but they never do. Which is why it's always interesting when we get the CPI numbers, because everyone always thinks like, oh, everything's getting cheaper. And you're like, no, just the money supply is expanding less. So it's not getting as expensive, but it's still getting more expensive. Anyways, quote, the fatal policy error is still a legacy that we're dealing with. Today, inflation is less problematic. He really does sound like a Trump guy just based on some of these sound bites. Best economy ever, golden age. Inflation is zero. Look, very, what's it? Europa has always been at peace or whatever. What's the Orwell quote? You know what I'm talking about. Anyways, here's Lawrence Lepard. Warsh throws Powell under the bus. Easy, Kevin. It is not as easy as it looks, or you make it sound. Keeping a Ponzi going is tough. You will learn. So, doesn't necessarily need to be a nefarious. March is going to get the call by the, big guys in dark suits and tell them how the world really works. I think it's a little more of what Lawrence Lepard said. It's extremely hard to keep the Ponzi going. They have to continue to expand, to add more liquidity into the system. That is an inevitability. We have memes for this. Nothing stops this train. Again, I don't know if I brought the actual report on the show, but I believe it was the IMF last week. I think it was the IMF. I might be blanking on what the source was, but you guys could look this up. They basically move their debt to GDP ratio, or rather the date of when that debt to GDP ratio will be passed by more debt than how productive we really are, from 2030 to 2029. Now, 2030 seems like a long way away. I always forget that, I always forget how old I am too. But we are in 2026. So that gives you at least if these numbers are, correct, if we are going to continue to slowly expand based on what we already know, which is probably not a very solid given here. 2029, we're going to have more national debt than the productivity of this country. Nothing stops this train. The big print is coming at some point. If we do start to see some catastrophe in the global economy, we all know there's only one way that they fix it. Well, maybe two ways, but it's still basically one way. The banks are going to get bailed out. The Wall Street institutions, the hedge funds are going to get bailed out. We clock the bill. A bunch of money gets flooded into the system. All of our savings get diluted unless you protect yourself in assets. If you hold assets, those assets are going to go up in price. You're going to be good. Now, obviously, this is a Bitcoin show. We think the most accessible asset for most people, well, I think of it, it's the perfect money, the most accessible money in the world, the one that doesn't have a ruler, the one that isn't controlled by any nation, a sovereign, neutral money, apolitical money, hard capped at 21 million, everything divided by 21 million, all the memes, you've heard them before if you've been a Bitcoiner for longer than a day. It is Bitcoin. Everyone needs some Bitcoin. Now, it is going to be interesting if he does get confirmed and how he views Bitcoin in the context of the Fed, when all of us Bitcoiners have usually chanted at least more than one time, "End the Fed." So it is I'm going to have to think through that one, because you're kind of holding two opposing views. It's like, all right, well, we did hear some rumors that Trump wanted to end the Fed, or, I know a lot of Bitcoiners want to end the Fed. But I guess before we get to that point, is a Bitcoiner, or again, air quotes, Bitcoiner leading the Fed just baby steps towards that? I highly doubt it, but it's going to be interesting. It's going to be very interesting to see if he does get confirmed. It's going to be an interesting world that we're living in. Anyways, nice little sound bite. I'm sure we will get some more news out of this. If we do get some other cool sound bites and stuff, I will play it for you guys tomorrow. On that note, maybe I do have an interesting news story. Here, we'll tease it. We'll tease it, and then I'll see what you guys say in the chat. Did you guys see that Reuters report or Reuters article about the Straight of Hormuz and Bitcoin payments? Not the first one. The second one about false messages, about literal scammers. I have an interesting theory about that. Or do we talk self-custody? Or did you guys already flesh out in the chat? I'm going to look over the commercial break, and I'll pick and choose depending on what you guys want me to talk about.
I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy, HIVE has quadrupled its global Bitcoin mining footprint and channels that same scale into high performance compute, where their AI cloud is now ranked #1 in the world for network performance. At HIVE, you've got dual engines, Bitcoin and AI humming, roaring, accelerating in unison. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable digital infrastructure. You can catch the latest buzz at Hive Digital Tech or at hivedigitaltech.com. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money, it's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
Okay, someone made a pretty good point. They said talk about the damn news. This is a news show. So, okay, we're going to talk about the news. Okay. You're making some points. Okay, so this was on Reuters, guys. And actually, I have the I don't even think I can say it. Anyways, I don't have a Reuters account. So, let me pull up the Reuters. Is it this one? Hold on. It's lagging on me. But there's an article on Reuters, not Reuters. I don't say my T's hard. I say them like a D. Okay. I got a Valley Girl accent. But on Reuters this morning, there was an article titled "Scam Messages Offering Ships Safe Transit Through Hormuz, Security Firms Warn." And here is the screenshot here, which basically gives you an idea. Fraudulent messages promising safe passage through the Strait of Hormuz in exchange for cryptocurrencies have been sent to some shipping companies whose vessels are stranded west of the waterway. Greek Maritime Risk Management for Marisk has warned. And apparently, and I did read this again. You guys can see it. I don't have a Reuters, but I did. We were reading this. Apparently, one of the apparently, one of the ships that, if you guys saw over the weekend, and I look, I called it again, and I'm not here to pat my own back here, but if you were watching the Friday show, Nico was like, everyone was wrong. The war is over. And I'm like, bro, it's still too early to tell. We got the announcement that the Strait of Hormuz is open, indefinitely, ceasefire, another deal's done. And then literally the markets close. Actually, it was like an hour after the show. We saw there was still bombing in Lebanon, and Iran basically said, look, the deal's off. The Hormuz is closed. And so there has been, and actually I think it was Skip on down the road. I think that's the boy in the chat, or is it Skip on onward? Skip onward. I forget your name, bro, but I think of you Skip. He's like, have we gotten any confirmation that any fees have actually been paid in Bitcoin or even in stable coins through the Strait of Hormuz? And I've basically been saying, like, I don't think we really have, because it hasn't really even been open. Like, no ships have actually really been flowing, at least, and not if they aren't like Iranian or Chinese ships. And I don't think that they're probably going to be paying fees for that. I think I don't have inside detail, but from what I would guess, they were only going to charge those fees to non-ally ships. And the whole idea is, hey, if you want to get through this, you got to pay in Bitcoin or stablecoin backed by yuans or stablecoin in general. And I don't think we've actually seen any ships go through the Strait of Hormuz pay in Bitcoin or whatever crypto, however you want to frame it. But I was always thinking of just the idea of, as we like to say, the Overton window expanding. It's a crazy news story in and of itself. Now we're seeing, like, we are going full circle in Bitcoin in our history here, guys, that Reuters, and I think we even talked about this, that in Reuters, because that came from the Financial Times, and they weren't really that favorable. They were just like, this is an interesting development. And then they started talking, and I showed you the Yahoo article, and they were talking about how this makes OFAC's job harder because they're using cryptocurrency to skirt sanctions. Now, what was it? A week later, we're getting this article from Reuters, which is quoting a, security firm saying that, yeah, well, it seems like the only money that's actually been sent in Bitcoin is from ships that got scammed by fraudulent messages to get Bitcoin. And I'm like, oh man, we are like, we're never going to get away from the idea that we're all criminals and scammers, guys, especially when this is happening. Anyways, like I said, apparently one of the ships that went through and got missiled and got blasted through the Strait of Hormuz, allegedly, apparently, according to this Reuters article, was one of the ships that got scammed. It's like, bro, we're never going to be the allegations. Anyways, Maris said that it believed that at least one of the vessels which tried to exit the strait on Saturday and was hit by gunfire was a victim of the fraud. Guys, it's brutal out here. Anyways, quote, after providing the documents and assessing your eligibility by the Iranian security services, we will be able, this is the message, we will be able to determine the fee to be paid in cryptocurrency, in Bitcoin or USDT. Only then will your vessel be able to transmit the strait unimpeded by the pre-agreed time. And that's the message that Mayor Risk is basically saying. If you get this message, then you're probably going to get scammed. Guys, these are crazy. We're never going to beat the allegations here. But yeah, update. So for everyone that wanted an update about what happened with the Bitcoin story on the Strait of Hormuz, we got it from Reuters this morning, and apparently people are scamming these ships, and at least one of them got hit by gunfire, thinking I don't mean to laugh, thinking that they were doing everything right, and the U.S. hit them. Starting to make a lot of the KFOB, the distractions going on. I don't know. I'm going a little, things are very interesting. Tell us about the camel behind it. The Silk Road art? This is from our boy Madex, bro. You don't know the Silk Road? Come on, Dan. Come on, bro. Come on. Nico can barely form sentences. He's not here though. I can barely speak. I don't know how this is my job, but Vessel FUD. Yo, let's not make Down Under Blues. That's a BS story. It could be, but besides the point, we're never going to beat these allegations that scammers and money launderers use Bitcoin. That's kind of what I'm trying to get across. This is going to be something that we're going to have to deal with for a while. Like, we haven't even gotten past, I'm blanking on his name, Sam Bankman-Fried. We're barely getting out of that. And now we're entering into a whole new cycle. And Down Under Blues, I do actually agree with you in many respects, because we are seeing, again, I talked about this a while ago. Like, if you're reading what's coming out of the media, there is this trend of, quote, ex-CIA contractors, security firm experts, anonymous sources that plant stories in these publications. And as you can tell, a lot of people use, and I do it here on the show as well, use a lot of the more traditional news sources, real sources. But when you look at them and you kind of understand what's going on, like, I do think you might be right. Like, these are probably potentially a planned story. But this is just starting to, I think, breed a whole new wave of FUD around Bitcoin. And now we're starting to see it play out. And we were talking about this when that news story broke. Damn, we're all scared. Hey, all right. At this point, if you haven't, they could, Familia, they sent Wrap Bitcoin via Ethereum. That's actually funny. I think everyone needs to go read Everyone's a Scammer by Michael Goldstein, aka Bitstein. The media, I totally agree. The media is always pushing parts or half truths of the story, or purposely leaving out information. I totally agree. 100% agree. I'm just saying, we're never going to beat the allegations, not for a while. It is interesting when you see all of the biggest institutions get into Bitcoin. Yes, there is a kind of shifting of the tide around Bitcoin, but the corporate press, which, if you do listen to a little bit of the Tom Luongo, Simon Dixon stuff, have a bias against a lot of the things that you might believe in, which is freedom, of course, Bitcoin. You follow the money, you start to understand that some of these publications that claim to be journalists are anything but journalists. They are just propagandists. Opti for it to go to 1 million, it was inevitable that Wall Street would have to buy in. I've known this for 13. Yeah, 100%. I totally agree. I've been saying that for a minute. I try to say it in a way, and maybe I could do a better job of it, of saying it knowing that the chat doesn't either understand that or they don't like it. But I agree with you. If Bitcoin is going to be the next world reserve currency, you think that it's only going to get there because people are holding it in Bitcoin? It's like, no, institutions have to use Bitcoin. I don't know what world people think that we're going to. They think we're going to a truly barter system with no corporations, no institutions, no hedge funds, no banks. It's like we're all just going to go back to some kind of tribal, like, barbarian society where, like, we only interact with each other as peer-to-peer individuals. We're never going back to that world. There will be institutions. There will be corporations. There will be banks. If Bitcoin is going to become the world reserve currency, if Bitcoin is going to become the world's money, then the current world that we live in will have to adapt and use Bitcoin. So I know the Wall Street boogeyman idea is very popular. We've all seen Wolf of Wall Street. We've all seen The Big Short. We are probably all aware of what happened in 2008. We've seen the Enron fraud. We've seen all kinds of ridiculous fraud, ridiculous literal criminal acts come from some of the very people that we entrusted with holding our money. But I don't think that we're going to go to a world that Wall Street doesn't embrace Bitcoin. That's how Bitcoin is going to get to those levels. Just on a math terms, they have all of the money. They have what's the total global assets? It's like $1,000 trillion. Yes, a lot of individuals do hold that, but the majority of that money is coming from these institutions, nation states, hedge funds. And then you add the money printer on top of it. Just get your piece of the pie. Just continue to stack Bitcoin. Continue to take Bitcoin into self-custody. You guys are funny. Let's see. The rally will be the last one that Main Street will be able to get into to get rich. You have 17 years to front run Wall Street. Yes, we have front ran Wall Street. If we all the truth, the world would be much better. Yes, well, you know, we're doing our best. And on that note, Down Under Blues. Here, let me pull this. Wait, was it Down Under Blues? Yeah. And now I don't claim to quote have the truth, big T here. I am parsing through the information just as you are. I'm reading the chat with you guys. I'm seeing the information. You know, some of you guys are a lot nicer when you when you're telling me your opinions and your facts, and you know, obviously I'm like, all right, he's being nice. I'm going to listen to him. But even if you're yelling at me, I'm listening, and I go back and I sit down and I contemplate my worldview, and I contemplate what I'm saying on the show, and I go search for the data, because I really do believe in the idea of I want to know the truth. I want to be better aligned with reality, not only because it's my job here to try to give you guys the best information I can, but the better I can understand every angle of what's going on, the better I will be at my job, and the better information you will get, and the better value I can give you. So I'm not here, burying my head, ignoring facts. I mean, I might ignore you if you're being an asshole, but I think that's only human here. But yes, I agree. I agree with you, Down Under Blues. If we did all have the truth, then why would we even need to do this? But we got to do it anyways. All right. Anyways, I'm rambling. I'm actually having a good time with the chat. Let me see. Are we still? Yeah, we're still going. I'm having a good time with the chat. Let's go see what's up with Jim Johnson on Rumble. Don't worry, Opti. God will protect you. I'm not saying all that. I am not saying all that. Opti, you are half right. We will have crypto only, but it won't be Bitcoin. Cool story, bro. Cool story. Those honestly, Jim, JJ and Rumble, I really love you. But am I the only one seeing the contradiction in those two statements? Don't worry, government will protect you. But also, Bitcoin's not going to last because the government's going to say you can't use it. Who's the one trusting the government more, me or you, bro? Just because I want capital to flow into Bitcoin and people to use Bitcoin, I don't think we're saying the same thing. Anyways, guys, I am rambling. Opti looks like he's about to solder some microchip. Oh, man, I'm getting cooked. All right, anyways, y'all know the deal. This is your boy, Opti. And I will see you tomorrow for another episode of Simply Bitcoin Live. Have a good rest of your day, guys. Get some sun, eat some good food, call your loved ones, and of course, stack some Bitcoin. This is the way. I'm forgetting what I say. I have like a list of 6. I'm going to have to write them down for you guys, but peace out. I'll see you tomorrow. Have a good rest of your day. Until then, maybe go watch some of our other content creators. We drop a lot of content on our channel of Simply Bitcoin. I forget who's going live today, but it's either Rustin, Dante, Hurley. Shouts out to Hurley, the newest guy on the block. Let's go. Oh, wow. Sorry about that, guys. Sophie, Oceans. I'll see you guys tomorrow. Peace out, guys.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.